Domestic equity markets clocked modest gains in the week gone by, amid quarterly earnings announcement and steady foreign flows. Frontline indices Nifty 50 and the S&P BSE Sensex added up to 1.2% in 4 trading sessions. They were supported by stock-specific movement across autos, banks, metals and tech. Broader markets were upbeat too in trade during the same period. The S&P BSE Mid-Cap and the S&P BSE Small-Cap indices logged a gain of 1% and 0.4% respectively. Going into this week, interest rate decisions by the US Federal Reserve and the Bank of England will guide markets' trajectory. According to a Reuters poll, analysts expect the global central banks to hike interest rates by 75 basis points each to rein persistent inflation. Markets on their part have already priced in the expected rate increases.
Both the US Federal Reserve and Bank of England are set to announce their interest rate decisions. The market expects both the US Federal Reserve and Bank of England to increase their benchmark rates by 75 bips or 75 basis points. This is what is currently priced in the market. There is a possibility that the Bank of England might surprise on the hawkish side and increase rates even further. But the current odds are that both these central banks will increase their benchmark rates by 75 bips. Some of the sectors which we like currently are capital goods sector, where we believe that the sector should benefit from the changing supply chain dynamics globally, with nearshoring or friendshoring being the next trigger, and thereby capacity shifting and new capacities getting created. Another sector which we continue to like and should do well also is banking, where we've seen that the ability of banks to increase rates is far better than NBFC. So you will see market share shifting towards bank from NBFC, while margins also to be better for banks. And the last sector which we continue to like is consumer discretionary names, including hospitality, which is benefiting from the near-term festive demand as well as pent-up demand over the last few years.
Back home, investors will track the Reserve Bank of India's additional meeting, which it has called on November 3rd. The MPC will deliberate on its response to the government, explaining why the target to retain retail inflation was missed for 3 consecutive quarters. Meanwhile, the ongoing results season will continue to take center stage. Companies like Tata Steel, Adani Ports, Nykaa, PNB, Sun Pharma, Tech Mahindra, Adani Transmission, Adani Enterprises, HDFC, Hero MotoCorp, Cipla, Titan, SBI and Bank of Baroda, among many others, will report the July-September quarter results this week. That apart, manufacturing and services PMI numbers from across the globe will be tracked too. On the technical front, charts suggest the S&P BSE Sensex can leap nearly 2,000 this week and attempt to reclaim 62,000 mark, with 59,000 acting as support. As regards Nifty, a close above 18,000 could trigger a next leg of rally towards 18,400 levels, with 17,600 acting as immediate support. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.